people bought at 65 or 60 or 50, it's too late at this point to react. In fact, I'm starting to look to buy some Bitcoin down here. Rewinding back to October, November, there were a lot of signs that kept on bothering me in regards to Bitcoin. So number one, it was that the hype amongst retail investors. I mean, it was just every month was a new higher target. It was first 50,000, then 80,000, and it just, 100,000. Then you started hearing price targets of like 250 and 500 within months. And the hype was just palpable in that every small investor was just piling in. And if there's one thing in my 20-year career that I've noticed is that when that happens, it's usually the end of a move, right? It's when, I wouldn't say that the institutions get the suckers in, but in many situations, it's kind of like that, where the John Q. Publics that maybe have never heard of Bitcoin, they say to themselves, you know what? This is going to be easy money. And I've learned the hard way that there's no such thing as easy money in the stock market or in cryptocurrency. So those were some signals there. You also had a double top on the daily chart, which everyone kept on saying, hey, it's going to break out and break out. And it did go above briefly. There were two specific days where you closed above that April high of 2021. And what was interesting is the next days it always came back below, right? It always sold back off. And I was pondering that, and I was thinking, what's going on here? Why is that happening? If there's so many buyers, how is it not able to just blow through this high? And the answer is there were big sellers selling, right? So you had big sellers coming in, and they were selling into that. They knew the hype was there. It coincided, interestingly enough, with the futures ETF, BITO, launching. And if you go back to 2017, what's so fascinating is that in 2017, the high of that cycle, when we hit about 20,000, that was when the futures launched for Bitcoin. So there was weird like symmetry there going on. In addition, I think the biggest thing is noticing the hype was very similar to the .com bubble. And ultimately, we saw the chart of Bitcoin starting to form the exact pattern that Amazon had in 2000, going into the collapse of the .coms, where Amazon went from 112 to about $6. So, I mean, there were just so many warning signs out there. I mean, just some other just brief ones. But when you start to see coins that are created by for jokes, like meme coins, and they get billion-dollar valuations, that's got to be an alert as well. So again, I hope, listen, it's too late to react at this point. If people bought at 65 or 60 or 50, it's too late at this point to react. In fact, I'm starting to look to buy some Bitcoin down here, and I have picked up a little bit. But just learn how, when everyone is screaming about some direction, whether it's bullish or bearish, think for yourself and say, let me step back here and not just follow blindly like a lemming over a cliff. So I mean, yeah, it was some crazy stuff, Elijah. I mean, just wild stuff looking back, but it was clear signals that we were likely going to head much, much lower. And one of the things, too, to keep in mind is that you had a cycle. Every 4 years, there's been a cycle in Bitcoin. 2009, it was created. 2013, you had a massive surge to the upside. 2017, and then 2021. And each cycle, 80 to 85% correction. So, just following history gave us a good basis to say at least we'll go down to 20,000. My ultimate downside target now has been adjusted to 12,000 after we get a bounce in this 20,000 range. I still remember vividly in 2017, when it was a massive bull market, CNBC had the Bitcoin ticker on the bottom of their screen all the time, and they always talked about Bitcoin. And then once the collapse happened, all of a sudden, like in mid-2018, it vanished. And they didn't even talk about Bitcoin. It was like, we're not even going to mention it. And that was the signal, that bearishness that no one wanted to even talk about it. That was the signal that it was starting to become a viable option. So for me, it's looking at what Bitcoin represents. It represents a different monetary structure where you have a limited amount that can be ever mined versus the US dollar versus all the currencies of the globe, where governments can just print and print and print. And I think that's the bottom line. It's also that the adoption has started. You have major players out there. You have institutions starting to get involved. You have people starting to accept it as a form of kind of digital gold. Still has a long way to go to get there. But again, these are the things that I think the general world are yearning for. They're yearning for something where if the governments continue to print, and even though the governments have stopped for now, I truly believe they will start again as soon as we get into a bad recession. There's a need for a place to store your money where it doesn't get diluted, and you know that there's a maximum run on it. But they're really trying to get inflation down to a reasonable level. They've said 2%. They're not going to get it back to 2%, folks. The genie's out of the bottle. My guess is they'll get it to 4%, and then it's going to be sticky between 4 and 5%. And then when you have a recession, which is inevitable, even if they do a soft landing, you're eventually going to have a recession. That's just how cycles work. Well, guess what? They're going to say, 4% inflation, but 10% unemployment or 15% unemployment. Let's start printing again, right? So they're going to start printing again. And that's where, in my opinion, Bitcoin really starts to have its day in the sun. The next big leg up starts at that point. Whether or not stocks will react positively, we'll have to see, because I do worry that the recession then creates a drop in earnings, and then you have to reevaluate the markets. But ultimately, Bitcoin, I think when the Fed kicks in those printing presses again, that's where the next bull market starts. Gold, I'm a huge fan of gold too, but I do think that gold, so I've bought physical gold, I've bought physical silver. Once you buy physical gold and silver, it's a little on the harder side to move it quickly. Like if you go to a pawn shop, they're going to give you a discount of like 20-30% on it. If you go and sell it on, back to a gold dealer, they're going to give you 10% less at least of the value. And again, carrying around a bag full of gold isn't exactly the easiest thing to do, right? So I think that there's a need for a digitalized asset that is very easy to move. And if you talk to people in Venezuela or in different areas of the world where their countries are seeing, hundreds of percentage of inflation per year, there's really a need for that. And then there's also a need for people to be able to send payments instantaneously for very minimal amounts of cost overseas to different, like let's say you have a family member that needs help in some country. Very quickly, you send these cryptocurrency payments. So there's a lot of use cases for these types of things. And also just the fact that physical gold itself is a little bit of a harder thing to move, I think makes people say, okay, we need something different here that will work, that has a stated run. And remember, people say, well, the dollar's the dollar. Well, the dollar is the dollar. The only thing it's backed by is the government, which continues to basically spend, and will ultimately have to spend more and more down the line. And you have a Federal Reserve who's printing more dollars constantly, obviously not right now, but they will go back to it. So you have to have an asset that has this kind of firm maximum. And I really think that people yearn for that.